If you need to talk to me, just okay.
Oh no, you're good. I like it when it's, you know, us actually corresponding, but I figured I would ask before I just say, hey, this is what's happening.
Okay, yeah, I can talk.
All right. All right, so I'm gonna share my screen. Just let me know when you see that screen. All right, can you see that screen?
Yes.
All right, awesome. All right, so we've already talked about your review of your last few trades, so we don't need to talk about that. So today we're going to talk about trend lines, the proper way to just understand price action, where you should be buying, where you should be selling is somewhat, not all, is somewhat key to just plotting a trend line. If you could master where your placement is of the trend line, when a trend line breaks, you know that you should be playing short or playing puts, and if it stays above that trend or bounces off of it, you know that you should be long or doing calls. Trend lines are better drawn on the higher time frames, so like daily, weekly, but they can be drawn on the smaller time frame. So if you are scalping SPY, which I know that you like to play, I would say whatever time frame that you're entering SPY on should be the time frame that you put those trend lines on, because it's essential for that fast impulsive movement.
Okay.
In a normal state, with the market giving whatever it's going to give us, we're either going to have an uptrend or a downtrend. In a nutshell, it's not something to be overthought. Uptrend is basically your support line, just diagonal, and a downtrend is your resistance line, just diagonal. So when we're looking at these trend lines, the best entry points are going to be the areas that it touches the trend line and bounces off, touches the trend line and bounces off. But we're not going to always get that as a perfect entry. So I would say let it bounce into the trend line, and then the following candle that closes above or off that bounce, that would be your entry candle. So it's basically the second candle. Then you'll know whether or not it's going to either flush through that line or just basically, you know, bounce and then have a continuation.
Okay.
With uptrend, you're going to have higher highs and higher lows. And with a downtrend, you're going to have lower lows and lower highs. So if you don't have to do a trend line and you can just spot that, great. But just for more technical, it would be, you know, good for you to have that visual line on your chart.
I agree.
And range in our overall market, we have three conditions. We're going to have an uptrend, a sideways trend, or a downtrend. Usually even like a ranging market, because some people always say like ranging is really sideways movement to me. If it's not moving too much, you know, up or down, or it's basically going up and then it's moving back down that same amount of money, that's sideways or ranging, however you want to name it. An uptrend is it's clearly going up, and a downtrend is it's clearly going down. Prime example of a downtrend today was SPY. SPY basically flushed out. I don't think a lot of it was news driven. I just think overall, historically, September always is a bad month.
Okay.
I don't know why, but it seems to always be the moment where it goes down. So,
Okay.
you know, just by knowing that tidbit, you could capitalize on the expectation of, we'll just say SPY, for instance, SPY falling, because you know that it doesn't perform well in the month of September. So we should be in downtrends. So you could play every pop that it makes, you
Mm-hmm.
play that drop for an entry.
Okay. I have a question about the sideways trend.
Yes.
How do I tell the difference between consolidation and a sideways trend?
Well, they're the same thing,
Okay.
because it's sideways. You know what I mean? And consolidation is when it gets really, really tight, so that it can make that move, whether it's up or down. So you could look however you want to name it. It could be, sideways, ranging, or consolidation. I classify them all as the same thing because it's
Okay.
an area where it just basically stays compressed. So
Okay. All right.
for our uptrend, proper term is going to be an ascending trend line. An ascending trend line is, like we talked about earlier, it's basically just a line that's going up. It is going to present those higher highs and higher lows. So this is the definition of what an ascendant trend line is. I just basically broke it down prior to because I don't like reading slides.
Okay.
This is a very, very good picture of an ascending trend line. Now, with the trend lines, most people only put the bottom line in. The way we're going to learn today is we're going to learn to put that second line in. Why are we putting that second line in? Because even though something is in an uptrend, as you know, it can still come down, and we'll say in those smaller time frames, which you could capitalize on a quick put to the downside to that trend line and then reverse the play. So that's basically, it's giving you the opportunity to play it twice, up and down, but you're knowing what the overall trend is.
Okay.
So it just gives you opportunities. Like, right here, we would say this is, even though the bigger picture is telling us it's an uptrend, we understand that, but this is all consolidation. So we might not play that. We want to be in on these moves here, right? So
Mm-hmm.
a long or a call here. We get out
Mm-hmm.
of our call when it touches the top line. And now what can we do? We can flip to puts.
Mm-hmm.
Bottom line. And then you just rinse and repeat over and over again. So having that second line in there guides you to thinking of it as, okay, it's a wall. It's stopping here. It's rejecting and it's pulling back. And all it's doing is pulling back to find buyers. But then you're going to have a moment that it breaks through. And that's just because it built enough momentum within this tight knit channel.
Mm-hmm.
Now it's going to break out of, we'll say this, this top line's highs and make new highs.
Okay.
Any questions on that?
No. No.
Your next one is going to be your descendant trend line. Your descendant trend line is a clear downtrend. It is going to give you lower lows and lower highs. So basically, just like our previous one, lower lows, lower highs. Where you need to be entering in on these, here is a beautiful example. Overall trend. So as I stated earlier, spotting the overall trend is going to be on your higher time frame.
Mm-hmm.
Drawing that trend line will be great. And then if you're flipping it to a smaller time frame, now you're going to see opportunities, just like on the long side, opportunities that you can buy and sell. So how Cheeks always says, hey, you can play one stock and you can continue to play that over and over again. This is how you can continue to play it over and over again. You know
Okay.
what the overall trend is.
Mm-hmm.
You're just capitalizing on small movement. So if I know that this is going to be puts, I may grab some puts, 3 weeks out and play this, right? But
Mm-hmm.
then when I see an opportunity for a call, like here, I'm going to take it. Here,
Mm-hmm.
short-lived, but here, take it. Here, take it. Here, take it. And same as on the long side, it will finally or eventually break out of its trend. So when this trend is done, or when these trends, whether it's the up or the down, when they're actually broken, you can delete these lines.
Okay.
Why you delete the lines? Because the trend is no longer in play. It is starting to form a new trend. But don't just take it on like one break. Let it break like 3 or 4 candles before you're like, oh yeah, the trend, because it can break and then come back into it. And then you've already deleted that work that you've done dead. But you can have this rocking out for probably weeks, depending on
Oh
the
wow.
time frame that you actually put it on too. Because
Okay.
that's going to be essential. What time frame are you putting this on? If you're putting it on a weekly, then you're going to be able to hold on to that trend line for a long time. And I don't know if you're anything like me. I literally hate marking up my chart and then having to delete everything.
Right.
You know, a couple
Right.
of days of time. It's just redundant. But I mean, it brings out better trades when you do it. So
Okay.
right. So here's going to be a few examples. This is basically the downtrend, areas that you could have played long on them, or calls, sorry, and areas that it bounced and it rejected. The end game is it made it down here at some point, and this is probably when it should have been, you know, time to get out.
Yeah.
And then remember I stated, let it break and
Retrace.
yep, but don't, you know, say this picture didn't look like this in the sense of it gave this candle, but we'll say that the next candle was a red candle because you didn't allow the rest of the candles outside that, we'll say, new channel to form. That would have been cause for a loss. So
Okay.
like I said, I like the number 3. So 3 candles would have been not this candle. 1, 2, 3. That tells me, hey, new trend in play. Let me take it.
Got it.
Here is an example of all of our trends. So this is, you know, when you open up a chart, you're going to see something that looks like this.
Mm-hmm.
You're able to spot these smaller moves on that smaller time frame. So we'll say that, you know, this was Tesla that you decided to play. Well, you decided to play an uptrend and, you know, you capitalized on some calls. And then the following week you flip to puts.
Mm-hmm.
And then the next week, so this is 3 weeks now, you didn't play this because you said, hey, this is consolidating. I don't
Mm-hmm.
like this movement. I'm not going to play. But you were able to find good options, whether it broke to the upside or broke to the downside for you. You knew which bias you would want to go. It broke
Mm-hmm.
down. You weren't so convinced because of the non-strong candles on this, you know, break. You decided to buy calls, and that's what you would have gotten.
Yeah, that would have been a lot too.
Yeah. So it's like it's a rinse and repeat thing where you can kind of sometimes predict what an asset is going to do because you've been trading that one over and over again, and it usually repeats itself. It's gonna, you know, go up, come down, go up, you know what I mean? Like it literally just really repeated this cycle. So after this go up, I'm expecting maybe a go down or a sideways. So you're now able to predict what the next move is going to be.
Mm-hmm.
And this is just them side by side of how they can look with something going, you know, the candles going into these channels bouncing in, bouncing out. But overall, this is the view that you want. I would say when you are looking to enter in on an uptrend, second candle is the one that you want. You want to identify. So your candle that comes in, whether it's a wick candle or a body candle like this one, you identify the move first. You enter in on the second candle. You
And that
identify the move.
and that
Enter.
would prevent me from taking it where I would think that it's a false that I would think it was a breakout, but it would be a false breakout, right?
Correct.
Okay.
You know, and of course, we'll say that you do this 10 trades in a row, right?
Mm-hmm.
Maybe 3 of them will be ones that are just like, yeah, no, that clearly came back out. But what is this going to do? This is going to ground you where it's like, oh, this is out of the channel. I need to close this trade. There's
Mm-hmm.
not going to be any, oh, I hope it gets back or it should come back. No, is it out of this channel?
Mm-hmm.
And if it's out of this channel, you should be out of the trade.
Mm-hmm.
So it's more of going to, I mean, you know, like I said, taking 10 trades, maybe 3 would go against you. And
Mm-hmm.
then again, you might go 10 for 10, you know, because it also depends on what type of market are we in? You know, what
Mm-hmm.
is the sentiment or the overall bias of the market? Like a lot of people were bullish on the market like last week, but
Yes.
yeah, but not taking, but they didn't look at the bigger picture of the market. We had a 3-day weekend.
Mm-hmm.
So we had no market, meaning people are thinking that as soon as the market opens on Tuesday, people are going to rush in and buy. Probably not with all the bad news that's been going on.
Mm-hmm.
You know what I mean? That's just making it worse. And then not only that, market opens, we had numbers come out at 9:45, and then we had something else come out at 10 o'clock today. So
Yes.
not only did we have that one day of no trading where everybody's got that anxiety, oh, I need to trade, you got the
Yep.
trader itch, and
Yep.
then you get hit with news, so it's, and if you went like on calls Friday because you were convinced on, the few bullish days that it had, you got clapped on those calls Tuesday.
Yes, I did.
Well, I wasn't referring to you, but since you said it. So in this picture, I had stated, well, I stated before that we need to be waiting, those two candles. Now, here is a clear scenario of it not meeting the criteria of really the two candles. But this, even though it seemed like it was like a false breakout, what happened here was we're supposed to wait until it actually bounces into the line and then it retraces up, right?
Mm-hmm.
This was already not valid, but it didn't really show that it was going to be something where it's like, hey, let's take puts.
Okay.
So this is one that you could have kept that trend line in and just like kind of waited a few days. We'll say if this was on a daily time frame, you waited, it did this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So about 2 weeks. You were waiting, but your trend line is already there for you. So this becomes valid. And the way that it wouldn't become valid anymore is if it rejected this line and then it went down. Now knowing, okay, let me grab some puts.
Mm-hmm.
If it pushes up and comes in, okay, calls are back in. And if you're able to, we'll say this second candle, you're going to get contracts that are fairly cheap because everyone's expecting this drop.
Mm-hmm.
So it also helps the premium that you're getting as well. Like how much you're paying for a contract. If you nail it right, you can get things for fairly cheap, hold on to them, and then when they actually go bananas, you're cashing out when people are trying to jump in.
And that's what I would love.
Yeah. You're gonna get there.
Yep.
So here is a perfect trading environment of a bounce and then the second candle take off. And the reason why you're learning this is because you're going to now look at the market, and the point is to only take good setups. If it's not setting up for you to win the trade, you don't take the trade.
Yep.
There's nothing wrong with sitting on your hands. If you can sit on your hands and actually look at the market, which I know, believe me, is a hard thing to do, it'll make your trading better. Because now every trade that you actually take, you've thought it out. You've weighed out all your options. You
Mm-hmm.
already have an exit plan because
Mm-hmm.
because now you're sitting and thinking. But if you're just jumping into trade, win, loss, and then you're just break even, you're not really seeing those big rewards of just chilling out for a bit.
Mm-hmm. I agree.
All right, so let's see it on a real chart. Let's work how to do these lines. And I need to clean my chart up. We'll do this. All right. And one thing that I do, I sometimes cheat the charts, is you see the lines. Well, because I'm gonna have to clean up my charts later.
Okay. Okay.
But you see how I have these lines here?
Yes.
I'll move them because I don't want to make new ones. I'll just move them to the top of the chart
Okay.
until opening, and then I'll replace them. It's just one little cheat thing that I do because it's not because it's so far at the top of the chart, it doesn't really bother me so much.
Okay.
Sometimes, I'll have a little OCD with it, but for the most part, that's been my cheat way of doing it. The lines are already there. So it's like, okay, when I see a high for the 15-minute, I can just come and just put it right there, and it's just all there. So that's another thing you could do.
Okay.
All right. So for the trend line, we're going to go on to the daily time frame. And I got to move these lines out more. And what we're going to do is we're going to work right here on this downtrend. So the tool that you're going to need is going to be the second one in, and it's going to be the actual trend line.
Okay.
Trend line, being that I'm spotting a downtrend, would be from the top to the bottom. Now, we don't go through the candles. We just try to get it as best as we can to touch.
Okay.
Because it's just like a support and resistance. We need multiple taps, to visualize it. So there's that.
Mm-hmm.
And then instead of grabbing, you could do one or two things. You can grab another line and draw it and try to make it even, or you can just cheat and click the line and click clone. When you clone, it's going to clone that same size line, and then you can just take the line and then you're going to move it to the bottom.
Okay.
So now you have a channel. Obviously, it breaks this channel, which is right here. It breaks. We identify the breaks on a doji. This is the daily candle. So we know that, providing this closes for the day above here, this is good to go.
And did that doji say it was about to reverse as well?
To be honest, a doji, I think dojis are more perspective. They're uncertainty candles.
Mm-hmm.
But all they're showing is it was split. It was 50-50. Obviously, we have a buyers and sellers in the market. It was buyers and sellers were fairly even. So you could continue to play a doji if it's we'll say green. I apologize because my blue candles are my green candles and my white candles are my red candles. But if you've seen that it was a green one and you kind of wanted to, play a little bit of Russian roulette, of course you could still enter on it. But the doji gets dismissed after this bullish candle forms.
Mm-hmm.
Because if you're seeing that just on the daily time frame, this is not even a trade. This is, okay, let me see what it does tomorrow anyway. And then this is what it would have did tomorrow.
Mm-hmm.
Being that you're on the daily time frame. So being on that daily time frame, it slows you down a bit. Because you don't, you know what I mean? Like you're not going at this at a faster chart pace.
But you're getting better setups because you're watching.
Yeah. Absolutely, because okay, you took this setup and we'll say you got in the call, so you bought on this candle.
Mm-hmm.
You have a 1, 2, 3, 4, 5 right here is where it was resistant. So if you bought a weekly, you're in that weekly 1, 2, 3, 4 days. This would have been the day that you got out. This day is Wednesday.
Mm-hmm.
You know what I mean? So it just, you're able to spot things way better with that bigger time frame and sit on things. The only sucky part is you're gonna have to buy contracts a little bit longer out, but you are able to get those more out of the money contracts because you're predicting it to get there.
Right. And I think that's why your trades are so successful.
Yeah, I sit on the weekly and the daily a lot, and I enter in on the 4 and maybe the 1 hour. Only time that I'm really entering on the 1 hour is if I have things to do and I'm like, okay, I got to get these orders in. obviously we're sending it to Discord, so get those in. But for the most part, I'm sitting and chilling. I'm waiting for basically A+ setups. I don't want, I'll take a B setup and I'll even take a C setup, but it's not one that I'm going to hold for long. So, when you're seeing those options being called out or those alerts being called out and I have time on them, it's because that is an A+ setup and I'm expecting it to get there.
And I've seen them get there.
So let's do it now on the smaller time frame. So now we have SPY. In SPY, I don't know if you got in on, did you get in on any puts today?
No, I was working. I wish that I had, but I was working.
You know what? It's just started, in my opinion. Today was a horrible, well, not horrible. It was down 2%. When's the last time you've known SPY to be down 2% in one day?
Right.
Yeah, it was down. It was down a good amount. But I think there's more, and we'll chart SPY too.
I've seen some commentators say that September 15th, around that time, that it's going to drop, that there's going to be a major drop. But historically, there's something that happens around that time.
Well, yeah, because you have a right here on SPY. Right here is a gap.
So it's a gap fill coming.
So that's a gap fill coming. So if I was looking at SPY, we have that gap fill coming. And then if it could flush past that bottom of that gap fill, you have a lot of levels that SPY can take out. You have this one.
And that goes back to 540.
That first line I just put in was 539.52.
Okay.
I would take this one. And that's 521.81.
Really?
And I would take this one, 510.13. These
Whoa.
are all major levels.
Whoa.
So if you're saying, you said they said like the 15th or something like that, that's on target.
Oh my goodness. Wow.
Yeah, that's on target. Because look, right up here is a double top.
Show me the double top. There.
1 second. Let me grab the tool.
Okay.
Gotta find. Come on. So it's rejected there twice already. Wow. It should have already flushed down.
Wow.
And when was this basically? This was August 26th, Monday. It was a Monday where it started to show weakness going to the upside. It had one day that it gapped up this gap here, which was Friday. See, and didn't I say that earlier? Friday, everyone thought it was going to, life was going to be bullish, and I don't agree with that. So this probably tricked people, and then if they were in any type of call, it just wrecked them.
Yeah, you ain't got to say people. You can say Lisa. It tricked Lisa.
Always trying not to say you. You didn't want to single you out. So if you're looking at a play for SPY,
and I am. Okay.
I'm not going to draw out this downtrend. We can clearly see that was a downtrend. It is broken now. It is invalid.
Yes.
I'm looking right here. So I'm going to take my trend line and I'm going to work here. Now, I could either bring it in, like about there, and look at that as a clean break.
Okay.
Clone it. Come on. There we go. Now, this is how I would be looking at it, because this candle showed it went up and then the next day, well, not next day, but that, today it rejected it. So
Yes.
for me, I would already be fairly bearish, but I'm bearish to these levels. I know that the first target it needs to take out is that 45, 46 about. It needs to hold this. So I would expect more downside on it maybe tomorrow, and then it kind of do something like this. I'm expecting it to come down, bounce a bit,
Come up and come back.
come down,
Mm-hmm.
bounce a bit. So that's how I would, because that's the problem. Everybody thinks that it's going to go straight up
Mm-hmm.
every single time or straight down every single time. And that's just not the way it works. So even though, but what are we looking at here? Even though I'm saying, okay, it could come down and reject this level and pull up, no matter how you look at it, this is the beginning of a downtrend.
Mm-hmm. It is.
So you can find, those areas to still be able to get into it, because like here is a good shorting opportunity. Here is a good shorting opportunity. So you have about two, and it could be more, I'm just saying this is a hypothetical situation of what it could show us.
Mm-hmm.
But do I think that this is just going to open up tomorrow and go here? Absolutely not. After the fall that it made today, I think that we can definitely see some more. I don't think we're going to see a 2% drop tomorrow, unless we have more news. I haven't even looked at the calendar. So if we have more news, yes, things can be catastrophic. But also, I do know that that's when we're expecting a rate hike or something like that, a rate hike.
Okay.
So if so, then yes, this will correct probably all the way until the 15th.
Okay.
So we could we could get that flush. Those another 2% would probably be somewhere like mid here.
Mm-hmm.
Sit and probably consolidate in this zone and then give us another 2%. That's 4% right there. And then if you're counting today, that's a total of 6% that SPY fell. And it would only be Thursday.
Mm-hmm.
So then they could allow SPY to, recoup. Because all it's doing is it's going to come back to the levels that it already took out.
Mm-hmm. Mm-hmm.
Right. So any questions on that?
No, thank you. You are just so smart. Thank you.
You are very welcome. So let me